Thank you, Mr. Chairman, and thank you to our witnesses for being here. And of course, I want to extend a particular welcome to my fellow Oklahoman and good friend, Mrs. Castillo. Today, our banking system is healthy, wealth capitalized. Our strength is in the diversity of our nation's banks, in size, business model, and specialization. But when it comes to deposit insurance and failures, there is a difference in how the government treats banks of different sizes. We saw this most recently when the FDIC provided a backstop for the systemic risk exception for the big banks that failed in the spring of 2023. But when a small bank in Oklahoma, which a number of my colleagues have alluded to, failed last year, that exception wasn't invoked. Depositors weren't made whole. When people hear that their deposits may be safer in a larger institution because of that implicit guarantee by the government, our smaller banks are left at a competitive disadvantage. I want to focus my questions today on Secretary Bessent's support, Treasury Secretary, I should say, support for expanding deposit insurance to non-interest-bearing transaction accounts as a part of President Trump's community banking and Main Street agenda. Importantly, Acting FDIC Chair Travis Hill has testified that based on the FDIC's estimates, they would not need to raise assessments for this expanded coverage. Though not a silver bullet, this reform is a much-needed improvement and could be part of a broad array of changes that must be made to strengthen our banking system. Mr. Ryan, the FDIC's report on deposit insurance reform after the large bank failures in March of 2023 says that increasing deposit insurance coverage to business payment accounts is the most promising option to improve financial stability. What are the benefits to financial stability and increased competition with expanded coverage for these types of accounts?
America needs banks of all sizes, and I think having a diverse and healthy banking system requires a lot of us. And I think that's what's unique about the American banking system. So having increased deposit insurance limit, I think reinforces the stability and the strength of this very diverse system we have today.
Continuing with you, Mr. Ryan, your testimony highlights the role small and mid-sized banks play in access to capital for Main Street businesses. How would an expansion of insurance coverage for accounts that businesses use for their payroll and operating expenses affect local economies? What's the real net effect?
Small and mid-sized banks like Old National are closest to its customers, and we are involved every single day. I wake up every single day and think about Evansville, Indiana, and I think there aren't any big banks in Evansville, Indiana. So I think it's important to have this big, diverse group of banks serving local communities. Without banks in local communities, they're just not as strong.
Mr. Ryan, are you concerned about an increase in moral hazard with a targeted reform approach? Picking winners and losers, I guess, is what people would say back home.
Thank you for that question. I think that non-interest-bearing accounts avoids this moral hazard question. It's not a moral hazard to protect small businesses.
Mr. Ryan, I've been on this committee a little while, and I've been in this world for a little longer than that even. There's some lessons that seem to be hard for us to learn occasionally. I think you would agree the most relevant lesson from the savings and loan debacle was when you take short-term deposits and make long-term obligations, you're exposing yourself, correct, sir?
Correct.
And that's a fundamental flaw that we see used in other financial decisions and institutions to this day. True?
True. I made a representative. Deposit insurance reform is no substitution for poor management. Poor management is on those board of directors and that management team. This is no substitution, but deposit insurance reform in a contagion, in a crisis mode, can certainly slow down a crisis and give the FDIC and other regulators more time to correct, what our systemic problems exist.
I've been here long enough to know that when the wheels come off, when we slam into the wall, we will do amazing things that usually are incredibly expensive and sometimes destructive in a hurried response. Preparation is better than catastrophe management, correct, sir?
Correct. This is about an ounce of prevention versus trying to manage a crisis after the fact.
I hope this is the first of several hearings on this subject matter. And with that, I yield back, Mr. Chairman.
Gentlemen,